All right. Good morning, everybody. Welcome to our live session. This is our live version of the daily market commentary. Glad to see a couple of you on here today. If you would do me a favor, throw a really quick hello somewhere in the chat so that I know that I can hear your voice, see your screen, all that fun stuff. That would be awesome. All right, there's Mr. Tapia. Good morning. Good morning. All right, so let's go ahead and get rolling. Taking a look at our markets. For those of you guys that are new, one of the things that we do here every day is we look at the daily market commentary. We identify our same markets. Important thing to note: I don't on purpose look at the markets ahead of time. So one of the things about the DMC is that when I'm looking at these markets, it's the first time I've identified any of these levels. Because a lot of people ask me, Chuck, what's your morning routine? This is my morning routine. I really use this to kind of set my whole day up. Now, this morning we're up pretty big in our equity market, so we're going to run through some of those. Is anybody still long, if I can ask, is anybody still long from our NASDAQ demand level yesterday? Is anybody still long from our NASDAQ demand level yesterday? That's always good to hear. All right, so let's go ahead and let me shrink my face, because Lord knows you don't need to see my face as large as it is. All right, so let's go ahead and get rolling, looking at the market. So starting with the S&P this morning, we had some confirmation areas up here for potential shorts. Now, why were these confirmation entries? Can anybody tell me? Those of you that are sitting at home, remember there's a little bit of a delay in the chat, but if anybody can tell me why these were both confirmation entries, I will be very, very proud of you and very happy, because it'll tell me that you're paying attention, you're listening to what we talk about. But in such being confirmation entries, they both pierced through the upper levels before giving us an opportunity for an entry. And we gapped up yesterday. Yeah, very good, John. It's counter trend. Our 4-hour market is telling us that we are in an upward trending market. And so anytime we're in an upward trending market, we're going to be trading counter trend. And if we try to get long on one of these areas, right? We want to do our best, or excuse me, get short. We want to do our best to stay trading with the trend direction. And if our trend direction is up, I'm going to be better finding longs. Now, I left this one on here for just a minute to highlight the fact that sometimes when a level gets busted through, it'll actually serve as old demand. Old supply will act as new demand, and we did get a little bit of a flip area here in this level. So you may or may not have been in front of the market when that happened, but that was really the key, is that it became a little bit of a flip area. So now we had a breakdown area here yesterday, but we did not get the prerequisite basing necessary for an entry on that breakdown, which is fine, because you got to get the basing for a level to make sense. So yesterday I didn't really have any entries in the S&P. There were no entries for me in the S&P. And on a day like that, you feel like you're missing out, right? And sometimes the hardest thing to do is to sit on your hands when the market's just moving the way it's moving. Well, that's okay, because the other markets did give me some entries. And I think that's why, a lot of people say, well, I only trade the NASDAQ, or I only trade the S&P, or I only trade the Russell. And I think it's important to trade multiple markets, because you then have multiple opportunities inside those markets, right? Breakout long in the YM this morning, Steve. I'll take a look at the YM. I don't normally look at that one in the DMC. So what am I looking at for today? Well, this 3232 line that I have up here is a potential breakout area. We are sitting just below it here on the 1 hour. I'd be okay if we got a bit of a pullback to this this speed candle move right here. If we got a bit of a pullback into that region, you also do have a bit of a gap fill area in here. And so both of those areas are very valid. This being the 3200 certainly has whole round number support to go along with the trade itself. So let's keep an eye on that one for today. I also still like the potential for a breakout, but I have to get quality basing. Right now, I don't know that I see that at the moment. Now, I also got to make sure that I'm not just taking these breakouts on um, on on any market condition, right? These breakouts have to happen with the right amount of basing, and I don't want to take a breakout at a news announcement, right? We think about why we don't take a breakout at a news announcement. The main reason being is that if there's a news announcement coming out, um, that can oftentimes cause price to wick up and down through a level. And I don't want to jump in front of a moving train. I've seen it happen where let's pretend that let's say that there's a news announcement coming out. And sometimes when there's a news announcement coming out, what you'll see is you'll see the markets will shoot up like this and then shoot right back down like this. And then they will, give you a little bit of a base and then start to move the way you think they're going to move anyway, right? Now, why would it shoot up and then shoot back down? Well, that's because it's oftentimes going to be looking to wipe out stops. And sometimes that'll happen when you take breakouts right at the open. So keep that in mind when you're looking for breakouts right at the open. That's also a time that can occur. Yeah, running those stops, Liz. That's exactly right. It's just are we getting in there to kind of run those stops? So I'm going to leave these lines in here today. I think both of those are okay. They're not super ideal, although because this is really a retest of that prior flip level. So if you wanted to be a little bit more conservative, you could make this one a confirmation entry, and then this one a limit entry. All right, Nasdaq. So Nasdaq hit our level. We did not get below the leg in, the wick of the leg in. So there's no reason for us to have taken a stop out here. And prices are continuing to run higher off of this level in the Nasdaq. So that has moved about 300 points off of our low in that Nasdaq level. We didn't get any opportunity on the breakdown. We talked about, okay, here's a potential breakdown, but obviously no basing existed. And what's interesting with this one is that it gave us a quick 4-to-1 right away, right? Right away, it gave us a quick 4-to-1 coming right back into this opposing level, and then came back in and has moved a couple of 100 points since that zone. So I now have to take that level completely off my chart. Okay, that level needs to be completely removed. And I remove that level primarily because I don't want to try it again. Is it still demand? Yes, it's demand until it's not. But I don't want to try that one again. This is an interesting reason, by the way. I want to go back. I'm going to put that back on the chart for a minute. So notice this level we have here. A lot of traders probably selected just the pivot. So if you selected just the pivot, what happened to you in this trade? You just barely miss out, right? It just barely misses the entry. And I've done that before. I mean, I've had that happen where I just get nicked by a tick. But that's oftentimes why I look for these rally-based rally levels above a pivot low or drop-based levels below a pivot high. So now we're coming close to these 15-minute supply areas. Remembering, though, that we're still in the context of a bigger picture upward trend. Our upward trend didn't change. We haven't, officially gotten lower swing highs, lower swing lows. So I still have those 15-minute levels. They are still valid, although I will say this first one has given us a little touch and go off the level. So if you didn't take the confirmation, if you decided, hey, I'm going to give it a go, take a limit entry anyway, it's actually moved a fair amount off of there. And by a fair amount, I say about 50 points off of a quick touch and go. But I'm going to remove it at this point because I feel like we've got enough momentum to kind of continue to drive us higher. Now, this one we are close to coming back, and we've actually almost come back to the gap fill area. But I don't like the gap fill area in the Nasdaq as much as I like the area below it. Why do I like the area below it a bit better? Well, to me, this becomes a little bit of a bear trap area. And the reason I like it as a bear trap area is because there's going to be a lot of traders that say, okay, well, once we get below the gap fill area, once we get below yesterday's close, I'm going to get short. And they're going to be selling right into the area where I think there could be a little pile of buy orders for us to get a bit of a reversal. So this one a bit lower than our S&P, right? So I'm looking at this level a bit lower than our S&P level. If you notice, this morning the Nasdaq's up 0.5%, the S&P's up 1.3%. So relative weakness today, the NASDAQ is relatively weaker than the S&P. And so I would naturally look for a demand level a bit lower if I'm going to see an opportunity. Now, looking at this, what about my overhead supply? I'm not taking much on the overhead supply. I still have my 15-minute level up above me that could still be a confirmation short. But other than that, I don't know that I would do anything. Because our big picture is still so strong and still so high. You know, we're close to that all-time high. So I think that makes makes good sense and a good opportunity if you know what you're looking for. All right, on to the rut. So the rut yesterday, same thing as everything else. Didn't get any basing on the breakdown as it just kind of wicked through and popped back up. And this is why we don't call that a false breakout, right? We do not call that a false breakout because it's not a breakout. A breakout has to follow a very, very strict set of rules. And that strict set of rules on a breakout are determined by what happens in our trade probability scoring around breakout rules. I need a minimum of 3 touches. I need to make sure that I have, other than 3 touches, I've got to have room to roam, and I have to have basing immediately before the level. If all of those 3 things don't happen, I don't have a breakout. So I certainly then can't have a false breakout. Now, this level up here, we gapped up into it last night and immediately popped right through it. So I will say that if you were going to take a short, the Russell was the one that was fairly clean. It was a decent opportunity right up in here. We just busted right through that area. Now, the Russell's up 3% this morning. It is our strongest market this morning. Looking at this on a daily chart, I want to go to a daily chart here for this. And the reason I want to go to a daily is because there's this area of supply on the daily that we are approaching. Now, I'm going to wrap my lines around this region because this region, if I take a look at it, is all of this. Goes all the way back to here that we're coming into. And so if we bust through there, I can see the Russell going all the way back up to 1700. Now, and I've said this in our live trade room, I think it was Sunday night. When we look at these markets overall, all 4 of our markets, and the NASDAQ, the YM did just give us that breakout long. For those of you that had that set up, let me remove this one here, but the breakout, because it did have this sideways basing before then popping. The Dow's up 2%. In all 4 of our markets, fundamentally, right, looking at this thing on a daily chart, fundamentally, with our unemployment where it is, with our markets moving the way they are, and you know, those of you guys that are Traders Already members that were in the live rooms, you've heard me say this. Should we be going up from a fundamental standpoint with our unemployment the way it is, with our interest rates as low as they are, with the you know, proclivity for stocks to kind of be as volatile as they are? Should we be in this strong, straight up bullish environment from a pure fundamental standpoint? Absolutely not. There's no reason for it, aside from the fact that we continue to pump money into the government. The government continues to pump money into the markets, right? So here's the thing that we have to remember, and I think this is key, and I feel like I'm getting on my soapbox here a little bit, but I think it's important for you all to realize this. And I think what's key here to remember is, when do I get short? If the markets shouldn't be going up, but they continue to go up, when do I get short? When do I do it? When do I decide, okay, you're right, John, that $12 trillion of stimulus is scary. You guys know when we came out of the 2008 financial crisis, we did a $2 trillion stimulus, right? In the financial crisis, we did a $2 trillion stimulus, and people lost their minds over bailing out the banks, right? We don't go short until the chart tells us to. I love it. You guys are all answering the right thing. We don't go short until the chart tells us to do so. So when we're looking at these markets, I think the thing to remember is that if the charts tell me to stay long, I stay long. You don't have your own opinion. You don't let your emotions cloud what the charts are telling us to do. And that's what's allowed us to stay in positions longer and allow those winners to keep running. So I just want to, you know, state that for those of you guys that don't hear me on my soapbox every day or every week, I'm gonna stay long until the market tells me not to. Okay? All right. So keep that in mind. And I think that there's opportunities to break to all-time highs in our other 3 markets that have not come to all-time highs. Of course, the NASDAQ has already eclipsed some of those all-time highs. All right, so let's move over to commodities. And then looking at commodities here, I primarily look at crude oil and gold as our 2 markets that we look at in the DMC, but we will talk about a couple of maybe 1 or 2 others. So looking here at crude oil, we are coming back to our area here. I've been talking for a while about a potential breakout above this region. I've been holding steady on it, and the way that I think it makes sense to trade this, and I'm just giving you my technical belief, is that this is a longer term play because we're looking at this on the 4-hour chart. Bigger pictures are going to get you a better result if you start to trade on bigger pictures. Well, what's the hard part about trading a 4-hour chart on crude oil, right? The hard part becomes the expense and the risk associated with the width of those zones. And so the way that I can counter that is by trading options. So the options trade that I like on this, it's still very valid, hasn't changed since we looked at it. I'm looking out a few months. And I've got the 41 by 46 bull call spread. When the breakout occurs, you've got a 41 by 46 bull call spread. Now, currently it's a 208 debit. That debit will go up just a smidge. But as long as that stays below 250, I'm allowed to take the trade. And then I've got a delta of 284. Now, this is 1,000 barrels per contract, so I need a delta of at least 250. Whereas in stock, I need a delta of 25, right? So now what this does is if we do get the breakout, my stop goes below the last pivot low, right? My stop goes below the last pivot low. So in this case, if we get the breakout above here, my stop would go below 39. Well, if my stop is there below 39, my risk is significantly limited on this position, whereas my risk is somewhere in the $500 range, whereas my reward is somewhere up in the $3,000 range. And so that's what I like most about trading the options position. We're getting a little bit of the basing in here. So if you're more conservative, you can wait till we break above 41.50. If you really want to be safe, you could move your stop to right there at that 40.12. But that's the trade that I think it's a little bit longer term, and I think it makes a bit more sense. As far as getting long on a pullback, if you wanted to try to say, okay, well, what if we pull back? Can I get long on a little bit of a pullback this morning? We do have a little area down here that was formed right around London Market Open. I do like areas formed at the London Open. They are typically going to be some of the best levels. Now, this long upper wick here is a good thing because this long upper wick means if the price came all the way up to here, came back down, we closed at the low because it's a red candle, and then shot up. So inside of this one red candle is a rally base, is a drop base rally, right? Yeah, inventory numbers today on CL, so be aware of that. So if you want to, I think you've got a decent little level here on the 15 if you want to just try to slide in and swipe a couple of points, a couple of ticks off this area. All right, gold, as gold member would say. So looking at gold, we are continuing our upward trend. We have seen some momentum shift in gold, a little bit of weakness. We had a trend line here, little bit of weakness in that piece. I thought we might get a breakdown here yesterday. No true follow-through on that breakdown. And so without the true follow-through on that breakdown, we've just kind of been basing around a little bit. If we come down, I think on the hourly level, you have a little bit of a rally-based rally here. There's a little wick over wick level here just above the pivot. Obviously, stop goes just below that pivot. And I would think that would make for a potential long entry. My only fear on this level is that our 4-hour is definitely showing a lot of slowing momentum. So if we get any basing before the level, in this region here, inside of a 2-to-1 reward to risk, I don't want to take that trade. So any basing inside of that level takes that level completely out of play. Okay, so where can that basing not occur? How do I know that? Well, let's do a real quick what I look for. If I get into this trade, I get in here, my stop has to go below the wick, so right here. So this is my risk. This distance right here represents my risk, right? If I have an entry here and a stop here, that distance represents my risk. Well, if I take that stop amount and I say, okay, well, if my target is right here, then I have a 1-to-1 reward to risk trade. I personally look for 2-to-1 reward to risk trades. I know it's sexy for me to show you, look how we called this 19-to-1 reward to risk trade ahead of time. That's great, but good luck, right? If you start taking 2-to-1s, and I know a lot of people have this very strict rule of I only take 3-to-1 reward to risk. 3-to-1 reward to risk. If it's not minimum 3-to-1, I don't take it. Well, I'll tell you, my trading results got better when I moved to 2-to-1. And the reason they did was because I was taking more trades and I was still having the same amount of success. But what happened was that at 2-to-1, if I'm taking a little money off the table or moving my stop, what I wasn't seeing was that trade where price went to 2-to-1 and then came back down and stopped me out. That completely goes away. And so I would say that, yeah, 3-to-1 is ideal, 6-to-1, 9-to-1, 13-to-1. But that's why you adjust your stop and you move it up as price keeps going, like our NASDAQ position, right? But if I get any basing inside of this range, I'm not going to be interested in the trade because that would then reduce my probability of getting a 2-to-1 reward to risk. Does that make sense to everybody? I mean, hopefully that should be pretty simple to grasp. But for those of you that are a bit newer, if you've been struggling with with why are my levels not holding, right? Why are my levels not holding, or why am I only getting a 1-to-1 and then I'm getting stopped out? Look to see, are you getting basing before the level? And when we talk about basing before the level, I use the term kiss of death. The kiss of death is basing before a level. All right. Nat gas, we actually had a decent little. Now, basing before a breakout level is what we exactly want. Had a little move on our NASDAQ Nat gas breakdown for those of you that were able to nab that one. And then it popped right back up a little bit later. But after about 6 candles, you were able to take a little bit of money off the table on this one. Looking at Nat gas today, I see this area up in here. Remember, we have inventory numbers coming out tomorrow. And then we'll be in the live trade room, so I'll run that through everybody so you guys can see it. But we'll look at this as an area for today for a reversal. I'm also just going to put a line down here for a potential breakdown. All right. Let's go to currencies real quick. So bonds and currencies. So in our ZN, this son of a gun. So we had this level here. This is when confirmation levels are frustrating, but it just happens. So we had a nice entry set up here on a limit trade, and price came close, and then we had a confirmation short where we popped right through that level. Let's move to a 15-minute. We came up into the level and just popped through it without giving us a solid entry, and then we got a really nice move away. So I didn't get the solid entry on this position due to the confirmation nature of the trade. And so now looking at this on a 4-hour, if we look at the 4-hour, what is our 4-hour basically telling us to do, right? When I zoom out to that 4-hour, what is that 4-hour basically, giving me an indication of, right? Because we had that little move down here, but now we're kind of in this range. And it is definitely giving me, I guess the word I would use is a signal, right? And its signal is, leave me alone. Right? It's like the person sitting at the end of the bar by themselves that's just saying, leave me alone. I don't want to be bothered with. That's what it's telling you, right? This is the person sitting at the pub all by themselves that just doesn't want to be messed with. They're there just to have a drink and they don't want to play around. So I will say that in this market condition, and I know that's a kind of an odd reference, but I'm sure you can picture it. We've all been there. In this market condition, what happens is your reversals get a little bit more hairy. I'll call them a little bit more hairy, but you can still take them, but you got to take them on smaller time frames. When I go to smaller time frames, do you notice all the wicks that we have in here? All those wicks make it a bit more dangerous. And I call it a thorny level. You've got a little bit of an area here if you really are looking for an opportunity. I'd say you've got a bit of an area here on the 15-minute, but those thorny levels are the ones that I'm afraid of. All right, now, so the Aussie, let's take a look at our Aussie position. Now, the Aussie in our 4-hour chart was doing the same thing. It was telling us, listen, stay away until at least until I break out of this range. And we were able to break out of the range. Now, when we broke out of this range, we've got a nice little run from that area. It didn't give me the prerequisite basing required to take the breakout, which I hope you can all see that by now, right? Price came up, we got no basing, and we popped through. So we didn't have any reason. Well, David, you say iron condor, but I would tell you that you're just not getting any premium. You're not getting, and if you, especially in the bonds, you're getting no premium for an iron condor. So that's one of the things I think that is because we looked the other day, couldn't find anything because the market knows it's not going anywhere either. But anyway, in the Aussie, we should have said no breakout, right? It just didn't happen. But what it did was it set up a little bit of basing in here for a retest area, and price has popped from that point. Now, if you are outside of the U.S., you may have gotten a chance to take that trade early in the morning. Here in the U.S., that occurred in the middle of the night, right? So if you were outside of the U.S., maybe early in the morning, you got that good retest opportunity. But now what I need to do is look and see where might I get in on a pullback, because my 4-hour, I've now broken back above that level. I can get long on a pullback if we get a decent zone. Well, if I go to the 15-minute chart, I do have a decent little level. Got a wick over wick here and this red candlestick, so I'm going to wrap it around both. So I've got this wick over wick right here, and I've got this little rally-based rally. So I can use either one of those zones. I'm going to wrap it around both. Let's get a little bit more precise. And I've had a couple people who have I'm going to use the word nicely complained that I'm not as precise as they'd like to be on my zone drawing, and they want the exact numbers every time. I will tell you, when you're trying to get through 12 markets in 10 minutes, you're not going to be precise. So while I appreciate the feedback, I will politely decline and say, listen, I'm running really quickly. You guys, hopefully, if you know about trading and the rules around line refinement, I want you to go in and find your own zones. So. But today, I got a little bit more time to be a little bit more refined. So I spend 30 minutes instead of 10. All right, so there's the Aussie level that I'm looking at for today. We get a little bit of a pullback. That might be a decent little opportunity. In the euro, this damn thing just barely missed us. I mean, it came down pretty close and then, boom, popped away. And so when I get that kind of a pop away move away from a zone, I felt like, oh, we're getting in. This is going to happen. Here we go. Like I had my trade all set up. I had an alert set up, and then we just didn't get there. And I don't chase. I don't believe it makes sense to chase a level. And so I'm going to leave that level in place. I think it's still a valid zone. I just don't know if we're going to get back to it anytime soon, because when I look at this on the 4-hour, we're really rocketing up hard. Now, let me ask you, why has the euro done this? Why has the euro rocketed up so far? Same thing when I look at the British pound, right? The British pound over the last few months, we have rocketed back up, right? Why have we done that? Well, we've done that because the dollar has shown a tremendous amount of weakness, and that's because we are willing to continue to print money, right? We're willing to continue to just print money like it's going out of style. Why not? And so on the euro, we've got some supply up above us. I don't know that supply is going to make a whole lot of sense. So when I come down to the 15-minute, yeah, the dollar's falling. It's going to continue to do so. When I come down to the 15-minute, we have this big speed candle here that started right at the European market open. That's where or at the London open. That's where I'm going to put my lines, right there. Now, might we miss that one? You bet your assets we might. It may not make it back to that level. So what I'm going to do is just look to this area for a reversal. If not, you might get a breakout trade above this region here, if we get a little bit of a pullback and a bit more basing, that would make for a pretty good breakout. Canadian dollar, oh, the Canadian. So we had a little bit of an area here that we anticipated for a move. We got a very strong move straight down through, just like our equities markets, and then we got the big rally back up. Now we're getting a bit of a tweezer top setup here. So if this tweezer top setup here holds, you can go candle to candle on a short. And the reason I say candle to candle on a short is because we're retesting this hammer candle supply. We've traded halfway into the zone, and so you can go candle to candle short in this scenario, meaning if we get below this candle's low, you've got an entry possibility. Now, I think your first target is right here, where we would have some opposing demand right down in that region, and that takes us, that area there takes us to right around the European market open for a potential long. So I think that's the level that I would look at in here. When I go to the 4-hour on the Canadian dollar, it's pretty sideways. So I'm okay with these small moves if I want to try to trade anything. Great British Pound. So looking at the pound on our 15-minute time period. Let's go to the start of the 15. This was the level that we had in place. I left this one in because of this little wick over wick area here. We got a little move away from that in the overnight. Our flip demand area here, this was that area here that turned into kind of a flip, becomes kind of a line of control. Thank you, Liz. Appreciate that. Awesome. Thank you for sharing. So we don't want to take a breakout at that time when that occurs. So now I still like this up here for a basing area if we get a bit of a breakout. I'm going to look to right here as our best potential area for a bit of a retest, looking at our 15-minute level. That would be the area that I think makes the most sense, would be there on the 15-minute. And then our Japanese yen. Japanese yen did come back on our little retest area. Big pop away off of our yen zone here. That became a little bit of a flip level. Lots of flip levels showing up in these markets. Looking higher. Well, let's go to the 4-hour. So starting at the 4-hour. Ooh. Okay, why am I getting that weird auto? There we go. There we are. Okay, so looking at the 4-hour, we have swing highs, swing high, swing low. I don't have a new swing high as of yet. My swing low is about the same, so I'm in a fairly sideways market. I think this is one to just kind of hang around and not do a whole lot, right? Hang around, not do a whole lot in this environment. So what I want to do is I'm going to take a look real quick for those of you that are trading the SPX options. We've been looking at these. I've been looking at these on Wednesdays and gotten pretty good results lately out of this. So I will later today in the trade feed, the Traders Army trade feed, I will post I'll post the zones that we're looking at for our credit spread. If we do a credit spread today, so keep an eye on out for that today. I will say that if I look at this one, I don't know. When we open up, we're going to open up significantly higher. All you got to do is take a look and compare it to, let's put them side by side with the ES. So remember, for those of you that trade the one-day S&P option scenario, you've got to look, okay, we're going to open up significantly higher, somewhere up in this range. We're going to open up right above resistance, right? So our SPX itself has supply up here, 32.26 by 32.36. We're sitting right now inside that supply area of, if we open up and the SPX opens up right around that same number. So we may get a little pullback right away. If we get a little pullback right away, you may be able to do a bull call spread somewhere above 31.40 that's gonna net you a pretty good credit if we get that pullback right away. Now, why do I say somewhere above 31.40? The reason I say somewhere above 31.40 is because of this area of demand right here. I think you've got an area of demand right here that may be an opportunity to kind of slow that down. If it starts to come back. So look for a little bit of a pullback on the open, giving you an opportunity for a bull call spread, and then you'll have that move going higher from that region. John, rules for how you do this. When you say this, are you talking about the SPX one-day trade? Yeah. So they're essentially the same rules that you already know, John. I mean, we have them certainly, but the rules on a one-day trade are that I'm looking at today's options expiration, right? And I mean, there's not. I mean, I'd love to say that we've got some super amazing proprietary rules that are hidden behind a paywall. That's not the case. It's really just we're looking at the options that expire today, and I want to find areas of demand and supply and sell a credit spread outside of where I don't think price would go. So today, I would say that this 31.40 might be a pretty good area because we're overall net bullish, and I have an area of demand that should stop price from getting to this level if we come back down. So I would sell the 31.40 by 31.35 bull put spread in order to capitalize on that credit. Now, the credit you receive is going to be completely up to you as far as how much risk you're willing to take and the exposure you're willing to have. So you can go $10 between legs. You can go $5. And I'd love to say that there's a strict rule. It's really up to how much are you willing to risk. For me, I want to get at least a 15% credit return, rate of return on the money that's being allocated. So if I can get 15% on a one-day trade, annualize that number. That's some of the things that I think are worth looking at. So real quick, I want to highlight something for everybody that we are doing on Saturday morning here in the U.S., although it'll be in the afternoon for those of you, John, and those of you that are across the pond and in the wonderful United Kingdom. Saturday, July 8th is our we're doing a trade review session with Justin Krebs. For those of you guys that know Justin, he is one of our senior traders. He does a couple of sessions a month for us. So he's going to do a live trade review session. So if you guys want to come to that, it is open to everybody, not just Traders Army members. If you're a pro member, we will be reviewing your trade. So click this button here to submit your trade, and then you will be able to kind of submit your trade ahead of time so we can review it. And so we will join and click the join live button to hop in. So that's how we do that session. Hemant, we'll probably do that for about an hour, maybe 2 hours. It really depends on Justin and how long he wants to go. We've got an hour slated for it, but we may go a little bit longer. So that should be, hopefully that'll be a great session that you guys get to ask some questions of Justin, and we can go through some charts in that session. So good opportunity for you. If you're not a member, feel free to join us anyway. I would love to have you. Members, if you are Traders Army members, what I'm going to do later today is I'm going to send you out all of my charts from today. So you guys have all of the lines. Just look in the trade feed update, and I will share all of my charts via the trade update. So, all right, everybody, I'm going to log off for the day. I hope you guys have a great day. Enjoy the rest of your week. If you are watching this on recording, do me a favor. Leave a comment in the session below. Computers like it when people actually leave comments and they leave a like. Everybody that's on here right now, do me a favor. Click the little thumbs up button that says like. Helps a lot. Channel duration really matters, and we're hoping to gather more subscribers even on our YouTube page. So appreciate you all. Hope you guys all have a great trading day. Talk to you soon.